Singapore's exports have performed better than expected, partly due to a surge in pharmaceutical exports caused by the COVID-19 pandemic. March also saw an increasing need for electronic devices as more people work from home. However, it's not all positive news. Economists say that the outlook remains grim as the world is falling into a recession. Brendan Tanota reports.
Singapore's non-oil domestic exports sprung a surprise, growing an unexpected 17.6% last month. This figure smashed market expectations of an 8% contraction, and it's also remarkably better than February's on-year growth of 3.1%. Economists attributed this to a low base a year ago, as well as support from main drivers like pharmaceuticals, electronics and non-monetary gold. But these segments can't hold the fort going forward.
I think pharma demand is going to remain strong because of the surge in demand for drugs during the COVID outbreak as well. But having said that, it's important to note that pharma accounts for only around 10% of total exports. So while pharma growth could continue, it may not be able to offset the decline in other components. More people are looking for gold as a safe haven, given that equities markets have tanked, oil prices have collapsed. It's a very volatile component. It can jump by 200% this month, but over the next few months, the jump may not be of the same magnitude, and hence we can't rely on this to sustain our overall exports.
Economists say as more countries grapple with a lockdown to combat COVID-19, the outlook for overall trade growth will be depressed. And the World Trade Organization said global trade is likely to fall by up to 32% this year. That's because of limitations to supply and demand as a result of the lockdown in several countries. The International Monetary Fund's also pricing in a global recession not seen since the Great Depression in the 1930s.
When we look at Singapore's economy, we're very small, very open, right? So quite clearly, our growth is aligned in the sense with sort of a global growth situation, right? As countries go into lockdown, I think it's very clear, right? From their perspective, they're going to get a demand hit, they're going to get a supply side hit. Similar with our case, right? Even as the economy slowly come back, and probably some sectors will come back a bit faster than the rest, number one. So overall, still curbing the overall demand and activity.
Singapore had also earlier lowered its economic growth forecast for 2020 to between -4% and -1%. Now that outlook is much worse than the previous estimate of between -0.5% and 1.5%.